week. NVIDIA. Maybe we should start there. Because yesterday's rally was a trap. Anybody that understands how to trade knows it's a trap. But here's what I'm talking about. When you have a CEO of a company and then the CFO, they hate, especially hedge funds, that are shorting your stocks. They are the enemy. So they'll set a trap for them. So the first discussion is with the CFO and the analyst. You and I work together. What we're going to do is set the trap. We're going to come in with low estimates. We're going to say that the estimate is at for the sales coming in at 54 billion. We know they're going to be 57 billion. And then we'll also say earnings are going to come in at $1.25. We know they're going to come in $1.30. Okay, good. We got the plan started. Also, boom, earnings come out. We beat. Oh my God. So everybody that's short, bam, they get nailed. So now everybody is short has to start buying their stock back. That moves the market up, the stock up. But there's no new money coming in. Why? Because when you look at a trend of a stock right here, this stock is going down. It's a trend going down. No new money's going to come in. No institutional money's going to come in. Remember, institutional money contributes 70% of the action. They're not going to come in. So you got the short covering coming in, and another thing we know is this. Who else is going to come in? The tourist investors. They don't know anything about volume. They don't know anything about trend. They're gamblers. And then who else will come in? The FOMOs. Those people who always fear of missing out. I got to get in. So the trap was set. Then when it peaked yesterday, no new money. What's going on? Where are they? So all of a sudden the stock starts turning around and starts going back down because there's no new money. So the trap was set. So but if all people had to know was, why would I be buying a stock with a trend going down? You wouldn't. Nobody does. Not smart traders. Never do that. But there's another trick they do that's interesting in the market with their upgrades and downgrades. I'll show you right here. Let's use Enron. When Enron's going up, right, there's all kinds of buy recommendations. Buy, right? Everybody's buying, everybody's happy. But then what happens is, all of a sudden the institutions figure out this stock is not going to hold. This stock's going to start going the other way. So they had buy recommendations all the way up. Now, right here with Enron, when it broke the moving average, they should have switched it to sell recommendations. Should have been sell recommendations. No, they don't do that. Why? Because they're going to short you. They're going to short you. That's why Wall Street always talks against shorting, how dangerous it is. You're going to lose your firstborn. You're going to go blind if you short. It's unbelievable because this is what they do. So as the market starts going down, they're shorting, they're making money. Now remember, they don't want the market to go straight down because they got to get their clients out, their best clients. They got to get them out. So what they have taken parking space in everyone's mind is, oh, don't short, but cost average down. And they know the mentality is this. Oh yeah, let's see, I bought the stock at 300, now it's 250. Well, if I bought it at 300, 250's got to be a great deal. And the brokers and the money man will tell you that. They say, yeah, oh, you bought at 250, now it's not 250, now it's 200. You're getting a good deal. Then when it drops from 200 to 150, cost average down. And look what a deal you're getting. You know the stock you bought for 300, it's now 150. What a good deal. All the way down, like Enron right here. What's going on? Notice how they keep getting these moves to the upside because guys like Kramer and everybody else in this stock at that time, and they still do it today, when the stock's going down, they keep buy recommendations all the way down. They should be sell recommendations, but you don't see a sell recommendation because the big institutions are selling. They want to make money on you. That's why they always tell you never to short. It's a bad thing. We don't want you shorting. You're going to get killed. No, because they're going to short you, and they're going to keep telling you to buy on the dip, cost average down. So when it rallies, they get their customer out. When it rallies, they get their customers out. Then finally what happens? Look at stage 6 right here. Remember, all the way down, it's buy, recommendation, buy. Kramer, right here. He put the biggest buy recommendation. You got to buy. You're stupid if you don't buy. This is the greatest deal ever. Buy, right here. It went up. Now what happens? All the big Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo, now they got their clients out. So what do? They pull their bids out, and it collapses. Okay, so we have buy all the way down, right? When it should have been sell short. Now what do? On the other side, they'll do the same thing. At the bottom now, they made all kinds of money shorting you. Now, on the way back up, they didn't change this to a sell, and they're going to keep the buy recommendation on the way up. So they keep the buy recommendation all the way back up. Then when it gets to the peak again, they know it's going to go down. Instead of switching it to a short, they keep the buy on. So they make a ton of money shorting you when they should have notified everybody with a sell short signal recommendation. So that's how they play this game. So again, this is what they did yesterday. They trapped the shorts. That's what that was about. So the next time a stock goes up, now if you have my chart, which is different than yours, we built this chart in 1998. Over 225,000 people use it because it follows the money, okay? It follows the money. So anyways, if anytime you see a stock going up but the trend is going down, why would you buy it? Don't buy it. It's going to go lower. Okay? And even today, when you got this kind of activity, the high and the low in there, it's going to bounce back and forth, and there's going to be too much volatility. Now, so what is going on now is this in the market. Remember, yesterday they came out with the job numbers. They said, oh boy, wonderful, 119,000 jobs. Wow, isn't that great? Boy, we're turning things around. No. Why don't you tell everybody the truth, the other part of it? Now remember, the jobs, 119,000 September, I'm happy. But why don't you tell what happened from January to August? We're down 800,000 jobs. Yes, it's great. We have 119,000 jobs. It's helping a bit, but it didn't turn anything around. So the market's up today because, we had 119,000 jobs. Well, tell them you're still in the hole. Americans have lost more jobs this year than they did all of 2024. So that's now another problem with all this AI stuff was Oracle. Oracle is now, and all these companies, all these investors are putting billions and billions and billions of dollars, all this hype, but the hype's bigger than the returns. You're not getting returns. Oracle also spooked the market. Another reason why the institutions didn't buy NVIDIA yesterday. Oracle, remember in September? In September, Oracle made a deal with OpenAI. The stock market shot up like crazy back here. Here, I'll put up Oracle and I'll show you. The stock market went nuts right here. Everybody, oh, wow, this is unbelievable, right? I said, well, you nuts? Let's wait and see. So look at the big jump with Oracle. Gave it all back. And remember, same thing. When this gapped up, where was the trend? It was going down. We had a little rollover here and it went up, but it wasn't enough to turn green. See it right here? And then it went down. That's why we were short. And when this gapped up, I said, this is not going to last because the trend is down. But people don't know that. Traders don't know that. They just don't know. So Oracle, now we're finding out they lost since September $315 billion in value. They also, for the next 5 years straight, their cash flow is negative. It's costing them $35 billion to create the power they need. $35 billion a year. They don't have the money to keep the lights on. So there's a lot of problems going on with AI. Eventually AI will be terrific. But right now, there's a lot of skepticism. So what you got to do when you're trading is make sure the next time they show you a stock like NVIDIA and they tell you go in and start buy. Remember, not when the trend is down, okay? We'll help you with this. And you got to learn how to sell short. Okay, there's no place to hide. Shorting is what you do. Imagine all those people in Enron, if they knew how to short, they wouldn't have lost all that money. But Kramer and the rest of it kept their buy recommendations on. Well, we won't do that here. We follow the money, and you can follow us and my stock picks. Check it out, free for 10 days. We've been doing this since 1998. We'll help you. Okay? See you on the charts.